Well, the term perfect storm is overused, but I still like it. And I think there's a coming together of elements this year that have never come together in this way before, and with this intensity and complexity that's going on, you name it, COVID, the overreach by the Federal Reserve in keeping rates, ridiculously low, the tremendous spending by governments at the state and federal level, socio-political problems.
Welcome to Inside the Markets, flagship podcast at StockPulse.com. Joining me today to talk some junior mining, I've got senior analyst of the Morgan Report, David Smith. David also co-authored a book with Mr. Morgan. He's also the ambassador of the LODE Silver and Gold Digital Project, something that we'll get into today. So, David, I want to thank you for being here and taking the time. And I guess before we get into this here, I wanted to also thank you for being part of the first StockPulse Silver Symposium. You played a big part of that, you and your colleague, Mr. Morgan. So I guess a warm, heartfelt thank you from the StockPulse team for that. So David Smith, appreciate you being here.
Well, thank you for the compliments there, Rob. And, I thoroughly enjoyed the symposium last year, looking forward to this year's version. And I love going around and helping where I can and doing some interviews and making a speech and that sort of thing. So I love the whole picture, and I think what you're doing is tremendous.
Yeah, excellent. Well, yeah, I guess let's get right into it here. Where we hang out in this junior mining space here. So let's talk about the playing field, the conditions of the metals. Maybe give us the David Smith big picture view of how you see maybe the global economy. Kind of a big one to bite off there, but see what you can do with that.
Well, the term perfect storm is overused, but I still like it, and I think there's a coming together of elements this year that have never come together in this way before, and with this intensity and complexity that's going on, you name it, COVID, the overreach by the Federal Reserve in keeping rates, ridiculously low, the tremendous spending by governments at the state and federal level, socio-political problems, you name it, and a bunch of other things, not to mention what's going on in the commodities sector, which is so undervalued in relation to the S&P 500 that it's arguably lower as a correlation than at any time in our life. And this isn't just one or two commodities. In fact, I think it was Goldman Sachs that said recently that every commodity on the board that they see all eight in the London metals exchange is in very much of a shortage. So this is something that the Chinese symbol of possibilities versus risk being the same is really there. And so people, they feel that I don't want to get involved because of the risk. I don't think you can not get involved because of the potential. The risk is not in getting involved is just as huge, if not more so, than getting involved and doing a principled, careful research, and then not leveraging, but taking positions after you've looked at given stocks and sectors so that you kind of have a good idea of what you're doing to lessen that risk and greatly increase the asymmetric nature of the reward.
Yeah, so let's kind of get into maybe a forecast for the year here. Inflation's proven itself not to be transitory. I think it's here to stay. Should be good for the metals here. How do you kind of see things setting up here, I guess, for 22? Obviously, you painted a pretty good picture, but lay it out.
I think we're going to see continued inflation. And, it's a combination of inflation because of the broken nature of the supply chain, which is not going to sort itself out anytime soon. We have very positive supply-demand metrics in the metals themselves, gold, silver, tin, zinc, just as an example, and of course uranium, which is a metal, believe it or not. And the questionable nature of where these metals are mined in many areas of the world, with increasing resource nationalism, increased demand on the part of industry, increased demand on the part of the investors. And so there's so much going on that it can be difficult to parcel out in a nuanced manner any given element. But I would suggest that if you look at them as all a big recipe in a bowl of, say, 15 or 20 elements, don't worry about which one is the most important. Just worry, or just be confirmed that all of these are pointed in the same direction, which, and I've stated this for a couple of years, I believe we're now in the early stages of the biggest commodities boom in our lifetimes, and I've been involved since 1972 in this space. And so I just think you have to be there, and it's going to do your work. Listen to people like yourself and the people that speak at the Silver Symposium, which is much more than just about silver, and do your work. And I think you'll be richly rewarded if you understand yourself, the markets, and what's going on.
Yeah, let's investors want answers, David, and you're a smart guy here. So let's kind of put you on the spot a little bit with maybe a number. If we're talking here year end, how was the year, and what are gold and silver looking like, and maybe some other commodities that you like?
You know, I understand the risk from a reputation standpoint of attaching dates and prices. And I've always avoided doing that because I know how tricky it can be and how you can have a lot of egg on your face, but I'm telling you, this year, and I started writing about this in some of the venues that I write in late last year. It was a feeling. It was a nuanced one. It was a feeling that comes from many years, in the business, not saying that I'm some special expert, but I sometimes it helps to listen to the feelings that you have, in addition to all the tools that we use in technical and fundamental analysis and observing the socio-political scene. But I really feel that we have a chance, and even if I'm wrong on this on silver, I'm not going to be embarrassed. I think we can see $50 silver this year being targeted and possibly exceeded by the end of this year. And even if we don't get all the way there, or if it goes and drops back in, I think that the mining stocks are going to be much higher late this year than they are right now. We've had a real, what I believe is a washout over the last really 8 or 10 weeks from late December and through February of 2022 of the different miners that have underperformed, but yet some of the better ones have not dropped very much, and they have recovered quickly. The same thing with physical gold and silver. It doesn't want to stay down. So I think it's very possible that the high in gold of a little over 2,000 will be challenged this year and perhaps exceeded substantially. And the very fact that it keeps bubbling up to that area is creating a handle on a technical cup and handle formation that I think has to be respected, regardless of how close we get to those valuations by the end of this year.
Yeah, let's dig into the junior miners. Since you mentioned them here, you painted a pretty good picture of quite an environment for them, quite an incubator for them to probably explode, I guess. So let's look at what that looks like. I know a lot of these companies, a high tide raises all ships. And I think that's what a lot of these people are doing. It's this gets into the hunting hidden treasures aspect. That's what these guys are doing. They're paid to get discoveries. So let's talk about how their year is going to go here. As you mentioned, off their bottoms, a lot of capital came into the sector here in the last couple of years. I'd ask you, I guess, a follow-up question. Did that capital get paid back through discovery? Was the exploration work, did it keep up with all the dilution that happened in the sector? So it kind of a big question to attack there, but yeah, lay out the environment here for these juniors.
I think if the project was good and if it produced good results, the money was well spent. Now, there's some it takes a while longer to delineate what's going on, but if you have the right people in a country safe, low country risk area, in a project that makes sense, that maybe there's been great results in the area earlier. If those things come together with competent management, and I'm talking the CEO, the CFO, the geologists, knowing what they're doing, using the newest methods that are coming out that are, if you and I were having this conversation 5 years ago, a lot of the methodology for understanding what's going on below the Earth's surface or at surface just wasn't there, except for, in a very few individuals. Now it's spread out more. But if you have those things coming together on a project, then the shareholders stand to be richly rewarded. And the caveat I would put in this is that there have been a lot of new companies out here in the last 6 to 9 months, companies I've never heard of before, which doesn't mean a lot, but when I haven't heard of the people before, that means something. And I'm kind of careful on that. I want people that I've heard about before who've done it, who bring in a good, strong board of directors, who can articulate what the value proposition is, and who are spending money carefully. And that's as much about being careful about where the drill holes goes as it is of another trend that I've seen. 2 years ago, almost any company that had a private placement was offering a full warrant for at least 2 years, sometimes 3 or 4 years. And now the trend that I'm seeing is not only less opportunity to get a full warrant, but it's gone to half warrants, and now quite a few projects which look like they can stand on their own, they don't even offer a warrant. And that doesn't seem to hurt them too much, because the investors that know what they're doing and know what they're buying are going, yeah, I'd like to have a warrant or a half warrant, but I'm not going to walk away from this just because it's a straight across a private placement price at a certain level without a warrant. They know that the potential for that project is so good that they'll take it without a warrant if they have to, because they want to be involved. So that's one thing that I'm noticing. So I think the money is being well spent, and the better companies are not throwing it away by having a lifestyle company. They're actually putting that money into the ground and into the research, and already they're starting to see good results, even though we have a very crowded field of trying to get those results out from the analysts, from the shacks that are doing the looking at the half core and telling the companies what they have at that point.
Yeah. So, I guess do your research, and again, why you'd need the Morgan report, and I'll let you talk about that here in a bit. Let's get into there's several ways to play these markets. Obviously, if you got the stomach for the junior mining, can get amazing returns. The paper market's a little dangerous, but if you want to play the metal, but of course, holding bullion, there's a digital side to this too. And there's all kinds of vehicles to do that. Well, I know a company that you're involved with, LODE. Why don't you take a minute here and talk to investors about what digital metals are all about, how to get involved, the importance of them, and maybe the safety of them. I know a guy like me, I cringe when I hear digital things, manipulations, things like that. But get into LODE. I've seen a lot there, and it looks like an interesting deal to me.
Well, first of all, the blockchain is what enables any of this to go on, whether it's Bitcoin or the LODE gold and silver digital project, or anyone else that you can mention, or the 7,000 to 10,000 altcoins that don't go by a very friendly name, which I won't use here now because most of them are going to be blown away in the sands of time. But the LODE, which is called originally the LODE Cryptographic Silver and now Gold Project, because it has tokens that are backed by gold and silver, and they have actual coins, AGX coins for the silver and AUX coins for the gold. And this is where people are able to buy these coins online by either going through the process of physical gold and silver, investment grade, and then this gold and silver is stored in one of 8 or 9 vaults around the world, so that the people can, with the coins, can actually spend them, can redeem them, can hold them for a price appreciation, a number of ways to involve in that. So we have 8 or 9 use cases already identified.
Switch towards a life of financial freedom. The LODE wallet helps you make the right switch by giving you access to a more reliable, inflation-resistant money you can trust. Money backed by silver and gold that empowers your businesses to eliminate expensive fees and settle payments instantly, and preserves your wealth for generations to come. Take back control. Download the LODE wallet today and begin building your honest money portfolio.
David Morgan and I have been involved with the LODE cryptographic silver and gold project for almost since its very beginning, going on 5 years now. And one of the great things about this project, among the other dozens who have tried and some who have completely failed and others who are moribund and others who are, on questionable paths right now, is that the project spent an inordinate amount of time complying with regulatory, issues around the world, and especially in the United States and in Europe and whatnot. And so they're on very firm ground now with understanding what's required of the project to be viable, to be legal, to be strong, with limited, potential for loss by some mistake on the part of the project. And therefore, it's growing quite rapidly now. And one of the things I like about the digital silver project on the blockchain is that it establishes an immutable record, as other applications do on the blockchain, whether real estate or company issuance or whatever, for the owners to see what they have, and it's there as a permanent record. Also, and I think this is going to become a very surprising circumstance for the market as we move into what I believe will be this huge gold and silver and all things commodities, really, bull market over the next few years. And that is having gold and silver, physical investment grade silver, lodged on the blockchain will become an unexpected demand driver for the metals. So as it becomes more difficult to get physical metal by mints and by metals sellers, this will be a very easy, very substantial way to add to your gold and silver holdings in a different venue that is a lot safer than having it stored in your home or having it as an unallocated, source of storage at some storage facility. And there are already precedents which have gone through the court of law where some of the big investment houses have claimed to have your silver and your gold in allocated form, but yet it didn't even exist there. They never bought it. They charge you for storage and insurance fees. And in the court of law, they were fined for doing so. So this is one less layer between yourself and an intermediary by going on the blockchain with some of your money that's dedicated toward holding gold and silver, which then can be redeemed in different venues when and if you need it, or kept for the potential for price appreciation.
Yeah, and it seems to be picking up steam here. Whether you're a crypto guy or not, I think the young investor looks for tools like that. So, and again, lugging your metals around isn't very, very practical. So you certainly paint a picture there too. So David, I guess give me what else is on your radar now. Certainly a crazy world. Geopolitical risk is certainly high. So we've painted we have quite an atmosphere, I guess I should say, for the commodities sector. I know you liked uranium. What else hits David Smith's radar?
Well, one of the things we've done at the Morgan Report over the last 2.5 years is we've established, we're big on gold and silver, physical first, and then mining stocks that represent best of breed. But also we've added the copper story, which is going to be an ongoing, really big deal going forward. Because of the tremendous demand for copper as an EV metal, and the fact that no big projects that are going to come online anytime soon have been discovered. So that gives an opportunity, for example, when one sector is kind of a little bit down, or one subsector in the metals, another one may be holding up or even advancing well. We've also added a blockchain subsector where we look and try to find a few blockchain miners, or even the blockchain itself, such as Ethereum, that we added a 1.5 years ago at $900, and it's now about $3,000 in the Morgan Report asset allocation table. And so by adding those subsectors with a select amount of capital that we suggest that readers might want to devote to it, and don't make it the tail that wags the dog, because these are all asymmetric, even more so right now than gold and silver, because they've started to perform that way. You can add really juice your returns, what's going on. And of course, with the uranium sector, which we were writing about 5 or 6 months before it actually started to show that it had fully bottomed, and now is becoming a very strong element in that. So it's it's kind of a basket of choices that you can have. That the key is to be careful and not put too much in any one of them, or allow them to become the tail that wags the dog, even as they start performing. Just leave it the way it is, as you said it. Hang on, don't leverage, and this can become a very, very powerful portfolio for you over the period of the next 2 or 3 years, for sure.
Yeah, and of course, the Morgan report there. We'll let everybody know how they can follow you and what the protocol is. And of course, your boots on the ground. You're all over the place. Any favorite jurisdictions? Any sneak peeks into where you might be this summer?
Some of my favorites are kind of my personal favorites, but they tend to align with the Morgan report approach and philosophy. And I'll state myself, and you can guess it. A fair amount of that would probably make sense for David Morgan's approach. And we don't always agree on everything. In fact, he encourages not only people that like me that write for him and with him to do their own research and sometimes come up with a different approach, but the same thing with the readers, because we're not here to spoon feed our readers. We're here to give them our best thinking and see if it fits for them as they put it together in their own unique way. And I think that's one of the great strengths of conferences like yours at StockPulse for the Silver Symposium, is that it's people that show up get a menu of what's out there, and they have some knowledge themselves, but they can add to it and then go ahead and activate their own plan rather than just trying to cherry pick what's going on without any background or feeling for what's going on. So in terms of uranium, I personally do not want to be involved in high country risk areas, except I made one exception for Namibia because it had a very good project. But when you look at Canada, when you look at the United States, it's hard to find a situation where you have huge country risk here compared to some other area. And even in Australia, which is not country risk per se, but you have to deal with companies that have sometimes hundreds of millions of shares outstanding. So you want to look into that and see if you want to be involved in that. But I'm very excited in the Midwest, in Montana, in Colorado, in Nevada. I mean, these are areas in Utah. These are areas that have shown over time to be elephant country for uranium, for gold and silver, for copper, and even for vanadium. And so when you go into those areas, and when you look at the Saskatchewan in Canada, I mean, you're already in an area that is already attuned to having a good support legally and environmentally for companies that are looking in these areas. And there's going to be better likelihood of them getting permitted for a new project or a larger project, rather than, say, trying to go into Oregon or California if you have a uranium play or a copper play or whatever. And they're justified in feeling that way. But why go into some of these areas that it's going to be an uphill battle to get anything going, versus an area that like Montana or Nevada, where they have high expectations for you in terms of an environmental footprint, as they should. But they're not going to say, you have all these hurdles, and then we're not going to give you a permit because we're going to give you, questions that you can't answer. So that balance is really, really important. And so I would rather go with people that have done it before, that are well advanced on permitting, than fly-by-nights that we've never heard of before. And there are a lot of companies, you don't even know what they're looking for based upon what they say their name is, because a lot of the good names, have been taken. So I think this is real important. And do your due diligence. Go with names that you've heard of before, that have backing, good financial backing in areas of the world that make sense, and that will put the odds in your favor. And just take that time to do the research. And I'm very proud to be associated with the Morgan Report and to be associated with your conferences, because I think these are the venues that give you the kind of information you need to make good decisions on your own.
Couldn't have done a better plug myself. So, David, I appreciate you spending the time here, and I'll look forward to having you back up and seeing how your predictions are doing on silver. So, David Smith, Senior Analyst, Morgan Report. Thanks for taking the time, David.
Thank you, Rob. It's great speaking to you today. Have a good day.